So I definitely think that's the right direction that we're heading in. The data last week, I think, was a clear sign that we are heading into a recession, even if we're not already there, which, will be seen in the next couple of weeks. But you had very weak ISM data. That's the manufacturing data that came out. Weak consumer sentiment data as well. And I think all of this is lining up along with micro data points that we're hearing from companies that are telling you that the data is rapidly slowing. And that's a real concern, because if you look at how earnings estimates are pricing in both this year and next, earnings consensus is still pricing in higher year-on-year growth. Particularly for 2023, we still haven't seen earnings estimates really come down. So I think that the market right now, despite the fact that we're off 21% year to date on the S&P 500, is still too optimistic in terms of earnings estimates and consensus, market expectations, particularly amongst some sectors that typically start to roll over early into a recession, like the industrial sector. You've started to see some weakness, but I still think that estimates are way too high for the industrial sector, and that's something that I think we'll start to see really percolate as we go through second quarter earnings season. So that's something to watch, because the early cycle companies like the shippers and truckers, I think, are early canary in the coal mines, but you haven't really seen widespread fear being priced into that sector yet.
Yeah, it's interesting because you've actually seen things like the shippers, something like FedEx, where they've kind of come up off their lows. They sort of said the outlook looks fine. And you just wonder if they're going by what's directly in front of them in terms of current order books and run rate of business.
Right. And what you've seen is a lot of supply, a lot of demand that has been held over from the pandemic is now hitting. And so they're seeing orders that were placed 6, 7, 8 months ago that's now flowing through into their business, which is making their business look okay right now. But when you look at new orders out, you've seen those rates and that demand really start to collapse. And so I think that's the risk. If you look at shippers, their rates have come off really significantly over the last 8 weeks or so. The same thing with trucking, where you've seen spot rates really start to come off. So that's what I'm looking at, the future demand, not the order flow that you're seeing right here, right now.